G'day, I'm Tor, and today I'm excited to be talking about Strike Resources because Strike Resources is a new iron ore producer and iron ore developer. Now, what's exciting about Strike Resources is they've just recently started exporting and selling iron ore from their Apurimac deposit in Peru. Now, you would not believe the grades or the quality of this iron ore. It's unbelievable. So essentially, their assays come back at 65.99% iron content. So that's high grade iron ore, and it's a lump product, so it attracts a lump premium as well. Now, as you'll see, the iron ore price has made a bit of a comeback to $123 for the benchmark 62% Fe price, and the high grade 65% is trading at $146 per ton. And the lump premium has recovered from 3 cents and now it's sitting at 16 cents per ton. So that's very positive. Now, so we have very good, exceptional quality, some of the highest quality lump ores in the world coming out of Strike's Apurimac deposit in Peru. Now, what else is very exciting is they're looking into signing an offtake with a South American customer. So they've sent a trial batch over to the South American customer. Now, why this is enormously beneficial is because the voyage time is only 6 days, which is even shorter than, say, Port Hedland to Qingdao. Now, which is 10 to 12 days voyage. So, you know, they have a very short voyage versus China, from Apurimac to China, is a 30-day voyage, which is phenomenally expensive. If you look at the Baltic Exchange Dry Index, you'll see that shipping costs have gone up 5 times since the start of the year, essentially. So now you could be looking at $30 to $50 per ton of iron in shipping costs. Which is crazy, and it's essentially shut down quite a few producers in Australia. So you notice Ridge Iron, Mount Gibson's Shine, GWR, Venture X. So there's some production being halted due to these high shipping costs and the drop in the plummet in iron ore price. However, we can see that the iron ore price has recovered a bit. Made a bit of a comeback, and the benchmark 62 is sitting at $123. The high grade 65% Fe is trading at $146 per ton, and the lump premium has made a comeback from just 3 cents to 16 cents as of last Friday. I'm making this video on Sunday. Now, okay, so essentially, Strike should be able to produce a really good margin at these current iron ore prices, even with the high shipping costs, as long as it can ship to the South American customer, if they do sign the offtake. So Strike estimates that they can produce their iron ore for $80 per ton, and then plus the shipping costs, of course. However, we can be, at today's prices, we could be looking at a $46 profit margin, which is $62 Australian. And they want to ramp up production to 250 kilotons per annum. So by my calculation there, today's prices, they could be looking at somewhere to $15 million profit per year. Now, if you look at the market capitalization of Strike Resources, it's $32 million, and the enterprise their enterprise value is even lower because they have some cash on hand from capital raising and both the sale of their iron ore. So essentially, Strike Resources was trading at 30 cents previously, just a few months ago, and has now dropped down to about 12.5 cents per share. So if iron ore prices do hold at these levels for some time, and we could certainly see, in my opinion, Strike Resources to make strong profits from their iron ore exports and get back to 30 cents, if not way above that, seeing as they're entering into production. Now, what else is also very exciting about Strike Resources is they have their Paulsens East deposit in Australia. So essentially they're considering a final investment decision on that and potential production late this year or early next year in 2022. So if that comes online and say iron ore prices do hold these levels, they're looking at over $100 million net present value, which certainly would indicate at least a 3 times upside to the share price. And you could add that onto the valuation from their Purimac deposit. So obviously the Paulsens deposit is a short lifespan of just 4 years. Potential upside, of course. However, the Purimac deposit is an enormous resource where you're looking at 250 million tons of iron ore. What also is very exciting is with the Paulsens East deposit, they're looking at shipping out of Onslow. So by shipping out of Onslow with the transshipping solution, Strike Resources can save substantially in the cost of road haulage, as it is a much shorter distance to Onslow than it is to Port Hedland. So Strike estimates that they can bring down their cash cost per production per tonne to between $63 and $69. So that's a substantial savings compared to their feasibility study. However, we do have to account for the higher shipping costs, which may potentially render Paulsens East unfeasible. However, if the shipping costs do subside, perhaps as congestion eases in Chinese ports and other factors and global trade sort of reverts to the mean, then Strike can potentially produce a present value of over $100 million for their Paulsens East deposit if iron ore prices can stay around these levels for at least a few years. So Strike has accounted for 150 in their feasibility studies, accounted for $115 per tonne iron ore benchmark price, dropping down to as low as $80 per tonne, and they accounted for a 10 cents per tonne lump premium, because obviously the lump premium should be justified going forward, especially with China wanting to reduce pollution from sintering. Obviously, so we've obviously got some value potential in their East Paulsens deposit. Going back to their Peruvian deposit, there's huge upside potential there, as the government in Peru wants to build a railway, which has been confirmed that they want to do this going forward, and that railway, could allow the development of Purimac into a full-scale, 5 to 20 million tonne per annum project at an extremely low cost of production, possibly as low as $11 per tonne in their previous feasibility studies. Although they probably are looking at updating these feasibility studies, but the grade of their products coming out of Peru would be, as high as 68%. So that's very promising, because if they can bring on a full-scale production in their Peruvian iron ore deposit, you could be looking at Strike Resources being valued in the billions.
Strike Resources also owns 43% of LEL. This holding is currently worth approximately $20 million, which makes up almost 2/3 of Strike Resources' market capitalization. LEL is expecting imminent approval to commence exploration for lithium on its tenements. The exploration is taking place adjacent to Orocobres' lithium brine operation, which is obviously a great place to be looking for lithium. LEL also has a high-grade graphite project.